Hi everyone. Today let's take a quick look at Jerome Powell's speech on Friday. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So I couldn't find any really good articles that described what was said, so I'll just do some cliff notes here for you based on what I heard. He talked a lot about flexibility and the ability to move rates up or down, potentially on what the data is showing. They said they're still data dependent, as they've been talking about. They said they're not going to overreact to the strong data that we saw last year or the weaker data, meaning higher inflation that we've seen over the past 2 months. They're not overreacting in either direction, and right now they are staying the course, and that is because they have so much flexibility in their current position. If inflation were to go higher, they feel that they are in a good position for that, and they could potentially go higher if they needed to. But if inflation stays on the current trajectory, they're still looking at the 3 cuts that they talked about in the most recent FOMC. The other thing that I thought was interesting, and he did refer back to the meeting, was he referred to the dual mandate. We have been seeing the unemployment rate go a little bit higher here recently, and they did mention that it is within their mandate to keep the unemployment rate within reasonable levels. And since inflation has kind of moved into a pretty good position, he said headline was around 2.5%, then they're starting to look at that dual mandate and make moves to potentially keep unemployment a little bit lower. It's still very low, but it is trending in the wrong direction. So those are pretty much all the highlights that I thought were interesting from this interview. The interviewer was a little bit annoying, but he was prying in and trying to get more information from Jerome Powell, who for the most part sticks to that script that he has from the FOMC in general. Not bad, but I didn't think anything here was revolutionary relative to what we saw from the most recent FOMC. I also wanted to mention the PCE data that came out on Friday. It was in line with expectations, so that was good. We didn't see a step higher. PCE continues to be in line. It really is the CPI and PPI that continues to come in hot over the last 2 months. And right now this continues to look good. So 2.8, everything that you wanted to see. 0.3 on the month over month, everything good there as well. And you can see that 2.5% rate that Jerome Powell talked about. So everything's good there as well. We are seeing rising energy costs. We'll see if that has any effect on headline CPI or potentially PPI. Maybe that's why we're starting to see some inflationary risks there. But PCE is not reflecting that right now. And this should be good ammunition for the Fed to come down on rates if we continue to see the unemployment rate go higher. Otherwise, getting into the usual data here, fear and greed index really has not given us any major indicators. Everything still looks very, very strong across the charts. Volatility is hovering, safe haven demand, bonds all in extreme levels, greed to extreme greed across the board. Let's look at the timeline just for a moment. Really nothing showing. This most recent dip was even more shallow than these other ones that we had seen earlier in the year. So still hovering, still looks strong going into next week. Moving over to sentiment, we saw another big swing back to the bullish side. So we dipped down to 43. That was the lowest we had seen in a month. And then we jumped all the way back up to 50%. So very, very strong in the bull side. You can see the bears dipped right back into that 22 area. Everything is very strong. Even the neutral sector moved a little bit lower. So bulls running markets right now. And we have not really seen that break for several weeks, if not months at this point. Moving over to seasonality, you can see April is expected to be quite bullish in non-election years. You can see basically straight up right until the end of the month. In election years, however, we do see some volatility in the mid-month. We'll see if that culminates. Still bullish during this first period across the board, and then some dips here around that 11th, 12th to the 15th time frame on trading days. And then after that period, that is expected to be quite bullish. So we'll see how this plays out. Neutral to bullish here initially, slight dip, and then bullish through the rest of the month. And then looking at the calendar, you can see bulls all the way across the board here. This is a bullish month. Bullish Monday, Tuesday, we'll see how that plays, and then Thursday for next week. Not a whole lot on the calendar, some economic data and unemployment rate for the Friday session. So looking at that calendar a little bit closer, you can see ISM manufacturing PMI, manufacturing prices, US manufacturing PMI, all coming out on Monday, 9:45 and 10 o'clock. And then you can see for Tuesday, we do have JOLTS job openings, definitely going to be interesting. Speaking of jobs, coming off of what Jerome Powell just said, CPI for the Eurozone, fairly interesting. Non-farm employment, always interesting for the ADPs. And then looking at ISM, and then looking at S&P Global Services PMI, non-manufacturing PMI, non-manufacturing prices. Jerome Powell speaking again at 12 on that Wednesday. We'll see how that plays. He's been talking a lot. I don't expect anything unusual usual at this point. Pretty much nothing here for Thursday, and then it is an employment week here for Friday, so non-farm payrolls, unemployment rate here at 8:30. It is expected to stay flat. The previous read before this one was about a 3.7, so we've stepped up to 3.9. Still not crazy high and still better than a lot of economies in the world, but if this continues to trend up, that could be interesting, and that could accelerate cuts based on what we're hearing from Jerome Powell, in my opinion. And then moving over to Max Payne, you can see massive call walls, 527, 529, 535, and 536. Lots and lots of calls right at the money. So to me, that looks a little bit bearish going into the open of the week. We'll see how that balances out with the seasonality that we saw in charts. You can see there's really no put walls here until you get down to 500. So we'll see how that plays. This looks a little bit bearish. Just keep that in mind going into the early part of the session. These are the options for the end of next week, so doesn't mean it's going to affect markets early in the week, but just something to keep in mind as we move through next week. Moving over to the charts, starting off here with the SPX on the monthly chart. We did get the monthly close, and you can see it closed right on the high. Still very bullish. Not quite overbought, just missed it, 68.85. See if it pushes to that next trend. I would guess that it's going to at this point. That is 55.14 for the next level. And then as we go to the next month rollover, 55.27 right there. So you can see we hit that same trend line. Looks like we're going to hit that same trend line here. We'll see if we get another big dip for about a year if we hit that level, but it does seem like we are definitely within range of that right now. That would get us into overbought conditions. You can see last time we were in overbought conditions when we hit that trend line, and that resulted in a multi-month downtrend. So see how it plays out. That's what it looks like right now. And then moving over to the weekly chart, you can just see I do have a shorter term trend around 53.50. Again, weekly chart still looks bullish, finished right on the high, new weekly high close. Momentum is fading just a little bit, and you can see we're definitely overbought, volume fading a little bit. Doesn't mean that we can't hit that monthly chart like I talked about, but we are seeing just some really small signs of weakness on the weekly chart. And then moving over to the daily chart here on the SPY, looking at levels, you can see 524.23, super important level. We tested it here on Thursday the 21st, and then we tested it again on Thursday the 28th, continuing to find some rejection at that level. Volume has been ramping up over the last 3 days, and you can see that bullish move that we got on the back of that. Momentum basically zero, RSI still bullish, just above the SMA and not overbought. So structurally on the daily chart, this still looks bullish and everything still looks good. And then looking at the Tasty charts, you can see we hit that upper ATR band. This is the monthly chart, which is interesting. So that upper ATR is 520.68, super important level. You can see we also took out the stops here to the bull side. We got that first bullish ATR, which is down here around 432. Obviously, that is a long way down from here. That is 100 points lower. So ATRs on the monthly chart, not really something to trade, but it is interesting to see that we did take out that bearish ATR, which was what we were in after we saw that big down move throughout 2022. And then you can see we hit that 55 EMA on the monthly chart. That was the bottom of the market, and then we rallied from there. So we'll see if this resistance is going to play, and then if it rejects, you have the 8 EMA all the way down at 477.34, which even a relatively shallow pullback on the monthly chart would be fairly substantial on the shorter time frames. And then looking at the weekly chart, you can see we've been well above that ATR for a long time. Momentum continues to fade on the volume weighted MACD, still super overbought. Weekly 8 EMA at 509.98, so right around 510, which even with that kind of a pullback, that would be about $13 lower from current prices, and we haven't really seen a dip that hard in many weeks. You can see the low here in October of last year, and it has just been straight up for many weeks in a row. And then as we get down into the daily chart here, you can see it doesn't look as overbought. You can see we continue to grind between that upper ATR and the 8 EMA, which continues to hold. That's at 520.12. We'll see if that level holds. And then below that, you have the 21 at 515. Volume did come through on that Friday session, so you can see volume kind of ramping into that bull push. And then you have the third ATR band up there at 528.56. Overall, definitely some overbought conditions that are worth paying attention to, but structurally still bullish on the SPY. And then moving over to the NASDAQ here on the monthly, you can see the last month was up 1.17%, very small candle relative to the previous 4 months, so it seems like we might be losing a little bit of momentum. Hit overbought conditions at 70.08. We are still above the trend line, so that is some support there at 18,126. We'll see how this pushes up to that next trend line. That would be around 18,800, which would be a substantial move, about 600 points higher. Again, I don't have any major trend lines in here. Probably need to look and see if we can find one that correlates with this current move. And if you just go ahead and add one here, you can see that resistance would be up around 20,700. So a pretty substantial move if we were to hit that resistance. I don't think necessarily that we're going to make it that far. It's already been a massive run. Big move down, big move higher. And we'll see how that plays out. Looking at the weekly chart, you can see we were down last week, 0.46 to the downside. After having a really strong candle 2 weeks ago, couldn't quite get up to that resistance. You can see we've kind of topped here. Looks kind of like a double top. And we'll see that on the daily chart, momentum starting to fade. RSI definitely looking weak. You can see double top, breakdown, retest, breakdown. That's a little bit concerning. Definitely start to see some cracks forming on the NASDAQ. Doesn't look nearly as strong as what we saw on the SPY. And then moving over to that daily chart, you can see this most recent run that we've been on. You can see that double top forming. We hit the peak here going back. We hit the peak here on 8 March, tested that again here on 21 March, and we have been holding that resistance 446.66 as resistance multiple times in a row now. And you can actually see some slight bearish momentum forming, RSI looking fairly neutral here, volume stepping up on those selling candles. So NASDAQ definitely showing some signs of weakness on the shorter time frames, while the longer time frames are still showing bullishness. And then moving over to the Tasty charts, you can see that same thesis. We took out the ATR stops back here in November. We've had 3 more months of bullishness on the NASDAQ. You can see we hit that upper ATR band last month, and now we're still there. So upper ATR is 438.86, and we're definitely above that, right around that 444 level. Momentum still bullish. No volume here over the past several months relative to what we had been seeing. ATR stop all the way down at 347.50. And then looking at the weekly chart, you can see we hit that upper ATR, pulled back to the 8 EMA, which is at 437.11. Now we got an inside candle on the weekly chart. Still bullish relative to last week's open. That's why you have the green candle here. Upper ATR 452.90. See if we can hit that. That would be nice. That would give you a couple of points of upside, around 2% higher. But you can see volume weighted MACD fading, no volume coming through on the RVol. And then you can see here on the daily chart how much weaker this looks. You can see that topping formation definitely finding resistance, has not been able to make new highs, pushing to that second ATR. Last time we touched that second ATR was all the way back here on 8 March. So NASDAQ showing some signs of weakness. ATR stops did roll up on that Friday session, and that is up at 429.44. So right now, in a holding pattern, consolidating, waiting to see if this is going to break higher and follow in line with those longer term charts that we saw. Moving over to the Russell on the monthly chart, strong month for the Russell, 3.22%, momentum still bullish, volume still looks good, RSI still pushing higher, and I have a level here at 212.10, tested that level, couldn't quite get above it. I'll definitely add some levels. You can see all-time highs here for the Russell at 244, consolidation before that most recent dip low. On the monthly chart, that is around that 225.50 area. See if we can make it that high, and you can see that volume traded area. Right now it seems like we should be able to push. We've broken out of this previous volume profile. We're pushing to that next volume, so price target for the monthly chart up around 222, 223, which is this most recent consolidation, and you can see the trend resistance is there as well. And then jumping down to the weekly chart, you can see it was a strong week, 2.55%. Again, 212.10, still super important. We do have some trend resistance up here around 213, 214. Would expect it to push through there. Momentum bullish, RSI bullish, still looks good, holding higher lows. We'll see if we can give this a little bit more structure. And you can see this trend that I added, marks this high, and that's why we're finding some resistance here. If it breaks out and holds and pushes to that 223 area, that would make sense. But right now we're at a little bit of resistance, and you can kind of see a rising wedge set up here. Probably looks more like that at this point. We'll see how that plays out. But right now, at resistance, looking for that break higher. And then jumping down to the daily chart just for a moment, you can see the gap up, big pin bar right to that resistance. Makes sense why we came up just a little bit short of that 212. Momentum and RSI still bullish. Support down at 208.22. Moving over to the Tasty charts here for the IWM on the weekly, and you can see how bullish this looks. It actually looks like a very similar setup to what we saw here. Going back to mid-2000, we kind of saw a consolidation, looks very similar to this. And then we saw a ramp up, hit that upper trend line, hit that upper ATR band, and then we consolidated before pulling back for 2022. And if you compare to right here, we saw a nice little rally. We're kind of ramping up a little bit. upper ATR level is at 218.37, and it does look very similar to this. Right in that same setup, you can see the bullish ATRs continuing to step up, and they did step up this most recent week. And then looking at volume here, you can see we haven't really seen anything in terms of volume. It is a little bit concerning that we have not seen the volume weighted MACD move with that, but you can see here during this ramp up period, volume weighted MACD was slightly bearish, and then as we got the ramp in, then it was bullish all the way up until that consolidation. So just keep in mind this looks bullish to me. And then looking at the daily chart here, you can see a very nice setup. Again, ATR bands stepping up consistently. Upper ATR is 214.57, so everything looks good there. You can also see the ATRs trending in the up direction, again giving you that bullish indicator, and we see the volume weighted MACD starting to roll back to bullish. So overall, I think the Russell is probably the best of the group in terms of bullishness. And then moving over to the Dow here, you can see it's been a colossal run. We're at all-time highs. Did add some levels, 392.44 and 398.76. You can see that kind of consolidation here. We'll look at those more on the daily chart. But momentum stepped back to bullish. RSI still super overbought. It's above the SMA, so everything looks bullish there. We also saw a breakout above the trend lines here 2 weeks ago. And then we continued that run up to the next trend line. So everything continues to look bullish in terms of structure on the weekly chart. And then looking at the daily chart, you can see what I was talking about. Pushed above that 392.44 level. That was kind of a consolidation high. Pushed above it, retested that zone, and then pushed right back to the trend line. So I did put one here, 398.77. That was the all-time high. Didn't quite touch it on the Friday session because of that trend line, which is a little bit concerning, but momentum and RSI both bullish here. So overall, Dow still looks good, but not as strong as the Russell. Moving over to the equal weighted S&Ps, again, you can see very strong movement, momentum and RSI both bullish, pretty overbought now at 75.87, at a level here at 169.76 and 167.53. So giving you some levels to work off of here in this new price discovery for the equal weighted S&Ps on the weekly chart. Everything still looks very bullish. You can see not a ton of volume coming in here, especially on this most recent push, but definitely seems like there's more upside to come. And then looking at the daily chart, you can see we continue to ride right along that trend line, got very close to it on the Friday session, if not touched it. Momentum bullish, RSI still bullish. Overbought conditions still on the daily chart. You can see clear consolidation, breakout, melting higher. Still holding those 9 and 21 EMAs at 166.76 and 165.63. So we've dipped below those a couple of times, but continuing to trend towards the bullish side. And then moving over to the Tasty charts, you can see on the weekly chart, we're above that ATR band. We'd been grinding on it for a couple of weeks, and then we overthrew it here, and we closed on the high 169.37, 8 EMA 164.11, and then you can see there's not any support down until that 153 area. You can see ATR stop down around 156.50. So while everything does look very bullish, there is definitely some overextension in my opinion, especially on the equal weights. We don't see the equal weights grind to the upside super often. Only time that we've seen that, at least recently, was when we did get that COVID dip, and then we rallied to that most recent high prior to the current high back in 2021. You can see there were many weeks of grinding along that level, so it can do it for a while. And we've really only been here for about 4 or 5 weeks at this point. You can see here, this was an extended period of time where we were grinding along that upper ATR. And then before we broke down, which took a long time to happen, we had a strong consolidation, couple of higher highs, but not the same kind of trending action. So definitely extended. Doesn't mean that it can't continue to be extended for a long period of time. And then moving over to the ratios here for the SPY Russell and NASDAQ SPY, you can see SPY Russell. Russell continues to underperform a little bit. It kind of looks like consolidation, added some structure here. So still below 252, still trending down slightly, but still within this pendant. So between the two, doesn't really matter. I've been a little bit biased towards the Russell, and that did underperform a little bit this week. We'll see how that plays out, but still has some decent support. 242 is the next level. And then NASDAQ SPY, on the other hand, you had some structure here, was holding support, and then that broke down 3 weeks ago. And then we continued to go down here. So 343 is the next level, and I'm sure you saw that on the charts as well. SPY going higher, NASDAQ consolidating, if not dipping a little bit. You can see the momentum bearish, RSI bearish. And another factor here is that when the NASDAQ is not leading us to the upside, typically markets do pull back eventually. The biggest companies in the world, those big tech stocks, are all in the NASDAQ, and if they are starting to lag, that could potentially pull down the SPY eventually, even if we're seeing breadth widen across all of the different sectors. Moving over to SPY divided by the M2 money supply here on the monthly chart, you can see where we're at between 24.50 and 25.90. This is the dot-com bubble, so we are definitely extended. You can see the most recent highs, we are way above all of them. Momentum and RSI bullish, seems like we're going to hit overbought conditions. Right now we're at a 68.25. Last time we hit overbought condition was the high here in 2018. And then we ended up going sideways for many months after that. Some pretty decent dips and some pretty decent rallies. But from that level all the way until February of 20, and then we touched the same level back here in March of 21. So very flat on the chart after we got to overbought conditions. So whether this rallies and it moves like we saw here on the dot-com bubble, eventually it does come down, even if it's many years later. Or you could just chop sideways like we did here from 2018 all the way up until January of 21. But in terms of the daily chart here, you can see we are getting a double top. We're not breaking higher like we saw on the regular SPY. Momentum's basically zero. RSI still a little bit bullish. We are above all the EMAs and SMAs, so that is still bullish. And structurally, it is all sound so far. Kind of looks more like a double top, so we'll see how that plays over the next couple of weeks. But right now, trend resistance 25.30, 9 EMA down at 24.95. Moving over to a section I'm calling stocks in play, or stocks that are moving right now, or either in the headlines or news. So right here I have Marathon. They've been on a run since Bitcoin's been on a run. So you can see we did push really high here up into the 30s. Most recently it was down around $7. So it's more than tripled, pulled back to that 18 area. And now we're rallying again right at the highly traded zone, hit VWAP, starting to break some of this structure to the upside. If it holds right here at that 55 EMA at 21.53, this could push back up to that $33 area, which would be a nice little run. That would be a little bit over $10 if it could do it. Obviously, this is a very volatile stock. It ran from $15 up to $30 and then back to $18. So super volatile. Definitely don't play this if you're not either trading it on a very short-term basis or you're willing to withstand some of that volatility. So definitely volatile. And then newsworthy, we got Reddit with their most recent IPO. The IPO was around $34, went public at like $46.80 or so, rallied all the way up here to $75, $74.80 back in that area, and then pulled back down to $49. So almost round trip the entire move from stock open up to its only peak. Otherwise, let me know down in the comments section if there's any other stocks I should be talking about in here right now. Moving over here to the Mag 7 on the monthly chart, you can see it was positive 4% on the month, so still pretty decent there. Upper trend line right here at 382.69. For next month, it'll be 387.97. Overall, still looks bullish. Momentum bullish, RSI still bullish, so everything looks strong there. Well above all the EMAs and SMAs, definitely extended. You can see how high we are on the MACD, up around 37. That was the peak that we saw most recently in December of 22. So MACD hitting almost those same levels of extension. RSI can hang out here for a long time. We're still overbought, so that's not saying anything unusual. But looking at that upper trend line as a point of resistance, if we did hit it, that's still another $30-ish of potential upside. So keep that in mind, can absolutely go higher. But I do want to jump down here to the daily chart because we did have 3 bearish days in a row. Not super uncommon. You can see we did have that same move here mid-February, hit the 21 and bounced. This looks a little bit more consolidative. You can see here double top. We had a high on 8 March, and then we had another top here 25-26 March, and then we've pulled back below the 9 EMA, holding that 21, holding the trend line in VWAP. If it's going to break down, it's probably going to do it here, and if it goes, it's definitely going to pull markets with it. So continuing to watch the Mag 7 at this critical level, 21 EMA at 353.44. Moving over to Apple and Tesla on the weekly chart, you can see Apple was down 0.46, still holding this kind of pendant. I still think this is going to break and we're going to push lower. 165.71 would be the next support. Got the 144 EMA there at 163.23. So Apple looks okay right now, holding support. You can see this has been a zone before. I would expect it to break down. And like I've talked about many times, you can see here on the volume profile, there is really no volume through the zone. It starts to drop off pretty substantial until you get into that 154 area, right around the 200-week moving average. And then Tesla continues this downtrend. I adjusted the structure a little bit so you can see a peak here, marked a high, overthrew it, looked okay, and then we broke down very quickly into their earnings. Got a slight pop on the news about self-driving trials, but right now still in that downtrend. Trend resistance would be up around 188, so maybe you look for a push there. But you also have this kind of bear flag setup, so breakdown, bear flag. We have not culminated on that move yet. Momentum, not showing much of anything, still bearish. RSI, still bearish. Volume peaked up a little bit. You have a short-term downtrend line. We'll see how that plays. But right now, everything is bearish, maybe showing a little bit of life. Overall, both of these stocks look pretty weak. Moving over to Netflix and NVIDIA, you can see both of these posting a bearish week, 3.29% and 4.17% respectively. Netflix has been on a run. You can see this kind of consolidation. Broke back below 614 as as the level. Momentum rolling to bearish, RSI breaking below the SMA, so early signs of a breakdown there on the weekly chart. And then you can see that same setup here on the daily chart. 2 bearish days in a row, breaking below all the short-term EMAs. So 21 and 9 both broke. VWAP broke, closed very close to the low. 55 EMA down at 573.42. This looks quite bearish. And then you can see here on NVIDIA, we had 11 weeks in a row of bullishness. We got a bearish week. Pretty interesting. Momentum stepping down, RSI stepping down. Volume not super significant on that move. Let's look at it on the daily chart. Might finally be time to start adding some levels through this consolidation and this most recent run, but you can see this trend, very important. Hit it here, could not break above it, testing it again, broke down from that level. Hasn't broken structure yet, so we're not below the 21, we're not below the highly traded zone, but momentum and RSI definitely bearish on the short term. Both of these have been very powerful stocks, and they are starting to show some signs of weakness. Moving over to staples and discretionaries, you can see these have both been on a pretty decent run. Staples all the way down here around $66 or so, and then has run up to $76. Most recent high is up around $77.50, and you can see that here in April of 23. I do expect that that's where we're going to get. We are finding some resistance on the July peak. Haven't quite eclipsed that wick yet, but I feel like we're going to. It's just my opinion. And then looking at discretionary, similar move. It's been in this rising wedge. Eventually, I do think this will break down, but it hasn't done it yet. Momentum, RSI still both bullish there. Price target right now, 189.38. Still waiting for it to get above 185.36. It's definitely found some resistance in that zone. So overall, both of these still look bullish on the longer time frames with some pretty close price targets. Moving over to oil and gas and utilities, both of these have been on a run. Oil and gas is breaking a level here, 154.13, starting to push towards these most recent highs in June of 22. That level is up around 170.64. And then you can see this level back here going back to October of 18. That is when you get up to that 177.70 level. So oil and gas showing a very strong run. Energy in general has been strong as well. So both of these have been good. Many weeks in a row, bullishness right at a critical zone. Held above it and closed, so that looks good. 161.59 is the next level. And then looking at utilities, very similar move here over the last 2 weeks. It really bottomed out around $60 and it's been running up to 65. So it's had a decent run, just short of 10%. Momentum and RSI both bullish. Seems like it's headed higher. Next level would be that 65.75 level, and then above that I have 66.81. Still have that 200 SMA right there at 65.94. So a couple of levels of resistance that could present a problem, but utilities has looked strong. You can see a low, higher low setup. You had a high, now we have a higher high, so everything looks good there. Not as bullish as oil and gas, but both of these look strong. And that's a little bit concerning considering how weak that technology looks, and these safer stocks are definitely running to the upside. Moving over to breadth here on the weekly chart, you can see both of these were positive on the week. 20-day breadth getting very close to that condition. 86.50 is a pretty important level. You can see just about every time we get into this zone, we do eventually break down within a couple of weeks. So we're getting very close to that level. Pulled all the way down to the 27 area, bounced all the way back to the 80. So we've round tripped that move. We'll see if this is another point of resistance. You can see last time we got here, it did take a couple of weeks, but we did break down eventually. And then looking, which would put you in that May timeframe, so bullishness through April, and then into May, which is typically a weaker period. And then you can see it here on the 50-day, same thing, got up to 92.25, touched that just for a moment. That is typically the top, pulled all the way down to that 48 area, and now we're pushing back to that 92.25 zone. So overall, both of these still look bullish, at least for the next few weeks. Moving over to 200-day breadth. Again, this still looks bullish. We did get a new high on a closing basis. Looks very nice. Pushing to that 92.42 level. That is where we typically see overbought conditions. You can see we got there in December of 20, pulled back into March of 21, topped out in April, May of 21, and then we eventually pulled back. You can see even during this pullback, though, we did make higher highs just barely, and then eventually markets broke down super aggressive, pulling us all the way down into the 11 area, and you can see we did eventually rally back into that 92 zone, and that is where we are right now. So headed towards 92. We'll see if we can get into that same zone. Again, could take a couple of weeks, April, May time frame, and then we start to see pullbacks from that zone, and that's after we hit that 92.42 level. I do think we're going to touch it, and I do think that that will be the top of markets. You can see MACD also looks bullish. RSI getting very close to overbought at 68.28. Doesn't mean we can't stay overbought for a little bit, hit that level, and then pull back, and that is my current expectation. Moving over to the dollar, you can see we've had 2 bullish weeks in a row. We broke out above this trend line 2 weeks ago, held that level, finally closed above 104.40, next level 105.50, and then you can see the trend line sitting up here around 107. Seems like we're going to see more bullishness in the dollar, and when we typically see that, that is when markets tend to top. You can see a strong run here in the dollar, bottomed out here in October. That was the bottom of markets. Markets rallied super aggressive all the way through mid-January on this big move down in the dollar. And since then, we've kind of consolidated. That's why we're starting to see a little bit of weakness in markets. Not much, but a little bit. You can see this higher low setup, breakout, looks clean. And as long as this structure still holds and the dollar ends up going higher, I would eventually expect markets to start to roll over, if not chop sideways at a minimum. Moving over to bonds, JNK right at that upper resistance. You can see 95.61 is the next level of resistance after this short-term level here, 95.43. So holding that level looks bullish. Momentum basically zero. RSI not showing much, just barely above the SMA there. So if it breaks here, could show more bullishness to come. Got the 144 EMA at 96.72, so important level there. And then TLT held this 92.82 level. So we came in here, held that level, looks okay. We're back above the 9 and 21s, not quite above VWAP, that's 94.98. So waiting to get above that level. And then you got the 55 up at 96.77. Could take a while for this to consolidate and eventually break higher, but it does seem like it's going to at this point. And then you can see the 144 all the way up there at 114.20. I do think $100 per share is probably where this should be trading, and I do think it will get there within the next couple of weeks. Momentum stepping to bullish. Our side just barely below the SMA. If we get another bullish week, it should be above it. That would be a nice confirmation on this. 3 bullish candles in a row. Last time we got that, it didn't come to fruition, but I do think that this one is probably going to be a little bit different and head higher over the medium term. Moving over to the VIX, really there's nothing going on here. We got 3 bearish weeks in a row, holding at support 1275. We're not at the most recent low, but this is basically the lows here. You can see we tested it a bunch of times, held this level. Doesn't mean it's going to do anything. Could absolutely chop sideways here for a long time, and that is kind of what I expect. A couple of weeks here at this level, and then we'll see what happens in the May timeframe. I think we'll see bullishness through April, especially with the seasonality that we saw. So April bullish, then we'll see how it plays out in May. And then moving over to my accounts, you can see here we got just above 130 for the end of the week, so doing all right, 5.7%-ish on the year. Continues to look good. IV rank very low here on the Qs, so not a lot of risk in markets. And then looking at my positions, same as the Thursday session, obviously. Covered call here at 144 for about $1.50 on those shares. Markets were down a little bit after hours. And looking at the poor man's covered call, no change here, so still on the Monday session for about $1.40. And then looking at the IWM, I sold a 209 for $2. Markets pulled back a little bit, so that's in a small profit. That is for the Monday session as well. We'll see how that one plays out. I am quite bullish on the IWM. I do think it's going to go higher over the medium term. It was one of the best looking charts, so I do like the Russell, but I do know that the Russell can be quite volatile. We saw a big move up on the FOMC, and it retraced all the way down to 205 before rallying back up to 210. So it can be quite volatile, plus or minus 2% here and there. We'll see how it plays out on the Monday session. Does give me some opportunity from current price. Max profit for me, 211.27. So it gives me about another $1 of potential upside there, while still giving me very solid protection at 209. So overall, bullish going into the Monday session, but a little bit more careful here but still relatively careful in terms of my covered call positioning. Let me know down in the comment section what you thought of Jerome Powell's speech. Was there anything that I missed or anything that I should have mentioned? Did he say anything unusual that concerned you? Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.